Okay, let's unpack this. We are diving deep today into the pulse of the Kenyan financial and business markets, specifically looking at what went down on May 22nd, 2025.
That's right. We've sifted through the daily market reports, dug into the latest Q1 2025 results from big names like KCB Group and NCBA, and scanned the key business news.
And our goal, as always, is to cut through the noise, pull out what really matters, and give you that clear, informed view, quickly. So let's set the scene for the day. Equities felt, well, a bit heavy.
Definitely bearish momentum. The Nairobi All-Share Index, the NASI, it dipped 0.3%, closing at a 133.84.
And that wasn't alone, right? Other indices too.
Yeah, pretty much across the board. The NSE 10 and NSE 20 were both down 0.6%. NSE 25 index dropped 0.4%. And the overall market cap also slipped a bit, 0.3%, down to KES 2,105.35 billion.
Wow. Okay, and trading activity, did that hold up?
Not really. Equity turnover, that actually dropped significantly. Really fell off, down 62.3% today.
62%, that's huge.
It is. We saw just KES 139.81 million changed hands compared to, what was it, KES 370.73 million the day before. Big difference.
And what about foreign investors? Still selling?
They were, yeah, still net sellers. Outflows totaled KES 1.97 million today. But interestingly, that outflow was actually much lower than the KES 20.95 million we saw yesterday.
Okay, so less selling pressure from abroad today, but still selling.
Exactly. And you saw that reflected in the participation mix. Locals were really driving the market at 84.4%, with foreign participation down at 15.6%.
So with that clear bearish trend overall, what was the main drag? What was pulling things down?
Well, the reports are pretty clear on this. It was mainly losses in the large cap stocks really weighing on those indices.
Ah, the heavy hitters. Which ones specifically were mentioned?
Let's see. East African Breweries, that was down 2.3%. KCB Bank dropped 1.3%. Cooperative Bank fell 1.2%. And Diamond Trust Bank was down 0.7%. You know, when those big guys move, the market tends to follow.
Right, they have a big weighting. But it wasn't all red, was it? Some stocks actually pushed back.
Absolutely. A few managed to swim against the current, so to speak. NCBA Group actually had a good day, up 2.0%.
Okay.
I&M Bank added 1.0%. Stanbic Holdings was up 0.7%. And Standard Chartered Bank managed a small gain, too, 0.2%. So some green in there.
Interesting mix, especially with some of the company news out. Let's dive into those Q1 2025 results, starting with KCB Group. What did they report?
Okay, KCB. Their profit after tax for Q1 came in at KES 16.54 billion. Now, that's almost exactly flat compared to last year, just a tiny 0.3% increase.
Flat profit, but how did the underlying business look? Interest income.
Well, that's where it gets interesting. Their net interest income, the core lending profit, actually grew quite strongly. It was up 8.5% year-on-year to KES 33.71 billion.
Right, so lending was doing well. Total interest income up slightly, too.
Yeah, total interest income rose 2.2% to KES 50.18 billion, and their balance sheet expanded a bit. Assets up 1.9%, loans and advances ticked up 0.1%.
Okay, so if the core lending income was up and the balance sheet grew, why the flat profit? What offset those gains?
Good question. The news reports bring it down. while that net interest income was strong, their non-interest income, so things like fees, commissions, forex trading, that actually dropped quite a bit, down 9.7%.
Oh, right.
And on top of that, their operating expenses also went up by 3.4%. So those two factors really canceled out the gains from lending.
Got it. So core lending strong, but other income streams weaker and costs higher. That paints the picture. And what about deposits? Did they grow?
Actually, no. Customer deposits decreased. They were down 4.8% year-on-year to KES 1,427.80 billion. That's something banks watch closely. A shrinking deposit base can constrain lending later on.
Right. Despite all that, how's the bank framing it, and what are analysts saying?
Well, the CEO was quoted talking about resilience, new business lines, digital efforts helping out. And the analysts, at least the ones at Daily Whispers, they have a BUI rating on KCB.
A BUI rating, but with only a small upside. What was it, 1.4% to 42.2 now?
Yeah, fairly modest upside target. Their thinking seems to be based on sustained earnings, benefits from expanding branches, that strong Q1 net interest income we saw, hoping for cost savings from tech, and expecting good things from their subsidiaries.
Okay. Let's look at NCBA Group then. They also reported Q1.
They did, and their profit picture looked a bit brighter year-on-year, actually.
How so?
NCBA's profit after tax was KES 5.4 billion. That's up 3.4% compared to Q1 2024. And their net interest income was really the star performer there, up a very strong 20.6% year-on-year to KES 9.9 billion.
Wow, 20% growth in net interest income is significant. But did their total income and balance sheet follow suit?
Not quite. similar to KCB in direction, but more pronounced. NCBA's total interest income actually decreased, down 5.1% year-on-year, and their balance sheet contracted more significantly. Assets down 5.6%, loans down 10.4%, and customer deposits also down 9.6%.
So another bank seeing deposits and loans shrink year on year, but NCBA managed better profit growth thanks to that strong margin expansion, that net interest income jump.
Exactly. Their earnings per share, the EPS, mirrored that profit growth, up 3.4% to KES 3.33. And as we mentioned, NCBA was actually one of the stocks gaining today, up 2.0%.
Okay, let's touch on Standard Chartered Kenya. Their Q1 results were also out, but the story sounds different.
Yeah, the news wasn't as positive for StanChart. Their profit after tax actually fell,
By how much?
down 13.5%. It came in at Sh134.8 billion compared to Sh5.6 billion in Q1 last year.
And the reason cited.
The reports point directly to a shrinking loan book. It dropped to Sh137.8 billion from Sh153.5 billion a year earlier. Fewer loans mean less interest income, right? So that fell 12.6%.
Makes sense.
Plus, their forex income also declined. The commentary blamed, quote, tough economic conditions for reducing private sector borrowing. So you see that direct link between the broader economy and bank performance.
Yeah, definitely. Despite that profit drop, though, Standard Chartered was the most traded stock today.
It was, yeah. By aggregate turnover, KES 28.84 million worth of shares traded hands, and it still managed that tiny 0.2% gain. High turnover like that often suggests strong opinions on both sides, maybe reacting to the earnings news.
Interesting dynamic. Okay, shifting from banks. East African Breweries, EABL, what's the news there?
EABL is definitely in the spotlight. It's about their UK parent company, Diageo.
Ah, yes. Diageo announced a big global cost-cutting plan, right? Something like $500 million, and selling off assets.
Exactly, and Diageo owns 65% of EABL, a stake worth around Sh100 billion. Now, the news reports are highlighting that EABL is described as Diageo's last major asset left in Africa.
Right, so the speculation is, could EABL be on the chopping block as part of Diageo's plan?
That's what analysts are suggesting, yes. It's a potential sale candidate. That kind of uncertainty can sometimes weigh on a stock.
What do the analysts tracking EABL itself say? Still positive.
Interestingly, yes, Daily Whisper still has a BUI rating on EABL.
With quite a decent upside, too, R 9.4% to 210.87. What's their reasoning, despite the potential Diageo sale?
Their rationale seems focused on the underlying business and the macro environment in Kenya. They cite resilient demand for EABL's brands and believe the company stands to benefit from things like falling interest rates and the shilling appreciating, which should lower their costs.
So it's a case of potential corporate action versus positive operational trends, a real balancing act for investors there.
Definitely. Speaking of analyst ratings creating interesting contrasts, let's look at Standard Group Pool Bill.
The media company, what's the call there?
Daily Whispers gave them a sell rating.
A sell, with significant downside suggested.
Yeah. EU 19.9% downside, targeting 6.02. The rationale is pretty blunt. Challenges in traditional media, declining print sales as people's habits change, and ongoing losses, which mean dividends are unlikely anytime soon.
Okay, clear fundamental challenges highlighted. But how did the stock actually perform today?
And here's the fascinating part. Despite that sell rating, Standard Group was actually one of the top gainers today. It rose 4.7% to close at 6.30.
Wow, so the market completely ignored the analyst's fundamental view today, it seems.
It really highlights that divergence you sometimes see. Short-term trading, maybe driven by other news or just momentum, can temporarily overshadow those longer-term fundamental concerns that the analysts are focused on. Classic market stuff.
Indeed. What about KPLC, Kenya Power? What's the analyst view there?
KPLC got a hold rating from Daily Whispers. But what jumps out is the upside potential attached to that holdee.
How much?
Huge 50.5% upside target, aiming for 7.94.
A holdee rating with a 50% upside target.
That sounds contradictory. How do they justify that?
Well, the rationale kind of balances things. They expect positive results from KPLC's efforts to optimize the business, things like cutting operational and finance costs.
Okay, so efficiency gains expected.
Right. But on the other hand, they temper that by noting that KPLC still faces challenges. Infrastructure constraints and high prices are still holding back potential revenue growth. So it's like, costs might get better, but growing the top line is still hard. Hence the whole D despite the high target price. Makes sense. It reflects a mixed outlook. Now, you mentioned agriculture earlier. There was specific news about tea companies.
Yes, profit warnings came out from Williamson Tea and Kapchorua Tea, both listed on the NSE.
Profit warnings? What are they expecting?
They're signaling that they expect profits to fall by at least 25%. And the reasons they gave really paint a picture of the challenges in the tea sector right now.
What are those challenges?
It's a couple of things hitting them at once. Firstly, there's an international oversupply of tea, which is naturally pushing prices down on the global market.
Okay, basic supply and demand.
Exactly. And secondly, they specifically mentioned that one of Kenya's top tea buyers has withdrawn from the market, reducing demand further.
Ouch. Double whammy. Is there data to back that up?
Yes, the news reports included figures from the Tea Board of Kenya. Production in Kenya actually increased in 2024 compared to 2023. More tea being produced.
So more supply.
While at the same time, the average auction price declined in 2024 compared to 2023, fell from about Sh311 per kilo to Sh295.
Lower prices. Got it.
And then there's the currency factor we talked about earlier. The Kenyan shilling has been appreciating against the US dollar. Well, that's good for importers, for exporters like tea companies.
It means their dollar earnings are worth fewer shillings when they bring the money home.
Precisely. It compounds the challenge. A clear example of how global commodity prices and currency movements directly hit specific sectors.
Okay, let's quickly look beyond equities. What happened in the fixed income market? Any excitement there?
A bit more activity than yesterday, actually. Secondary bond market turnover increased slightly, up 3.2% to KES 14.58 billion.
Any particular bonds driving that?
The reports mentioned the FXT1 2017 10-year bond was the highest grossing by value, while an infrastructure bond, the IFB 120 22 14-year, was the most frequently traded one.
And the overall bond index? Stable.
Pretty stable. Saw a small gain, up 0.2% to 11,147.25. Suggests bond prices were generally steady or slightly up.
What about short-term rates, T-bills?
Also very stable. Tiny decreases in the 91-day, 182-day, and 364-day T-bill rates. The interbank rate held flat at 9.90%. So yeah, much calmer than the equity side today.
And exchange rates? Any major moves?
Nope. The reports indicated general stability against the major currencies, dollar, euro, pound, yen, yuan, and also against regional currencies like the Ugandan and Tanzanian shillings.
Okay. And the derivatives market? Still quiet.
Dead quiet, according to the reports. Value and volume traded both stayed at 0. Open interest contracts also unchanged at 9. Not much happening there today.
All right. Now, away from the daily trading, there was some quite significant market development news, right? An approval from the CMA.
Yes, this is potentially big news for Kenya's capital markets. The Capital Markets Authority gave the green light for Kenya's first ever asset-backed security, or ABS.
First ever ABS approved. What's it for, and how much are they trying to raise?
The goal is to raise up to Sh47 billion from investors and the asset backing this security. It's the construction of that new government-owned sports complex, the Talanta Sports City in Nairobi.
So investors are essentially funding the construction, with the future stadium complex acting as the collateral.
That's the idea. It's structured through what's called a special purpose vehicle, or SPV, basically a separate legal entity set up just for this, named Lindsay Finco Trust. The ABS will be issued in pieces or tranches through this SPV. It's quite an innovative way to finance a major infrastructure project like this using market investors.
Very interesting development to watch. Anything else on the company notice front?
Just the usual kinds of things. Bamboo Cement had an AGM notice and a notice about a temporary trading suspension. And, as we discussed, NCBA and KCB formally published those unaudited Q1 results.
Okay. And finally, just to put today in context, how did global markets perform? Did that influence the mood here?
Well, the global picture wasn't exactly rosy either, which probably didn't help sentiment locally. Major indices around the world continued to weaken.
Which ones specifically?
We saw the S&P 500 in the U.S. down 1.6%, the NASDAQ down 1.1%. Over in Europe, the UK's FTSE 100 and Germany's DAX were both down 0.8%. And in Asia, Japan's Nikkei fell 0.8%, China's Shanghai Composite down 0.2%. So weakness pretty much everywhere.
Any particular reasons cited for this global dip?
The source material attributed it to growing fiscal anxiety among investors. Apparently, concerns are rising, particularly around the U.S., following a recent credit rating downgrade and talk of a tax cut bill that might worsen the budget deficit there.
So worries about government debt levels in the U.S. are making global investors nervous.
That seems to be the narrative. That kind of anxiety can make investors less willing to hold risky assets like stocks, pushing them towards perceived safer havens. And that negative sentiment can definitely spill over into emerging markets like Kenya.
Wow. So recapping May 22nd here in Kenya. Definitely bearish day for stocks, pulled down by the big names, trading volume way down, foreigners still selling but less aggressively. Yet underneath that, you had some companies like NCBA posting decent profit growth, KCB holding steady on profit but with interesting underlying shifts. Sector-specific pain in agriculture, big corporate news swirling around EABL, and this new ABS development opening doors,
Yeah.
all against a backdrop of global jitters about fiscal issues.
It really underscores how many different layers are always at play, doesn't it? You got the micro individual company performance, sector issues like tea prices, you got the macro interest rates, currency movements here in Kenya, then corporate actions
Yeah.
like potential divestments, market structure changes like the new ABS. And layered on top, that global sentiment driven by events happening continents away, it's all interconnected.
It really is. Which brings us to that final thought for you, the listener. When you see all these different forces pulling and pushing the market, company-specific, sector trends, big corporate moves, even global anxieties,
Mhm.
how do you personally filter through that? How do you decide what's noise and what's signal when navigating these interconnected forces for your own interests? Something to chew on.
Definitely a lot to think about.
And if you found this deep dive useful for navigating it all, please do subscribe to the show so you don't miss our future analyses. We'll keep digging into the data and the stories behind the numbers.
Absolutely. And do follow us on social media. All the links are right there in the description for this deep dive. We'd love to hear your thoughts too.